Hi traders, today we are going to be discussing market structure. Market structure is a very important concept in trading, and every new trader should know what is market structure. We should be able to draw market structure. So before I start, I want to ask some question. Is the market random? Can you predict the movement of price in the forex market? Let me know your thoughts in the comment section. Now, what is market structure? Market structure is the price action that tells traders if the market is bullish or bearish. In bullish market structure, the market is gaining value, the market is making higher highs and higher lows. We are going to see that in the chart. In bearish market structure, the market is losing value, the market is making lower highs and lower lows. So this is all you need to know to enable you identify whether the trend is up or down. So let us look at pounds USD chart. Now if you look at this 1 minute chart, it will be difficult for you to predict price movement accurately with it. So I don't encourage anyone to use 1 minute, 5 minutes chart in price prediction. You can use it for entry, and if you are doing that, it must be in harmony with the higher time frame. So let us you look at the possible movement of pounds USD in the next 1 week. Let us try to predict it using market structure. So we are going to start with the higher time frame, that is the monthly. I earlier showed you how I do my chart analysis. This tutorial is specifically for market structure, just to teach you how to use market structure. This one is introduction to market structure. In the next video, in subsequent video, I will be going into types of market structure and how to use market structure in trading proper. So for us to make our analysis, we use the higher time frame. So this is the monthly time frame. You can see that we have history as far as 1st August 2016. So we are going to be analyzing from 1st August 2016 to date. Today is 8th of March 2024. So we are going to be analyzing this market. Imagine analyzing from 2016 to 2024 within few minutes. So let's look at what is happening. We have market move from here to here, from this point to this point. Now after that, what happened? Was there break? Is what we call breaking structure. When market moves from A to point A, let's say this is point A and this is point B. Now if there is another movement that breaks point A and closes below point A, we say that the market, there is a breaking structure. So we can see that the market moved from here to here. It closed below. It actually closed below this point. So let's look at the line chart to see what happened. So it closed below. So there was a breaking structure here. There was a breaking structure. So after that, this is point A, B, C. After that, for the sake of time, I will not be labeling it, so I will not waste your time. After that, market moved from point C to D. It did not close above this structure. Okay, it was almost at the same place, at the same level. Let me include the round numbers, so it will help us to. It's very important in market prediction. So what happened next is that price broke this structure, moved from point. This is now point what? A, B, C, D, from point D to E. So you see there is a break in market structure. There is a break in market structure. After that, what happened? Market is now retracing, and we have the fib tool. I'm going to make a video on how to use it. The fib tool will also guide us to, it tells us, it will help us to predict the price movements. These are the possible areas that price can move back to. So we are currently in bullish market. The market is retracing, although on the long run we may be in bearish market, because if the market stops somewhere here, it may come down to break this point. So that will make us to be in a bearish market. So you don't trade in isolation. You factor in everything while trading. You don't just say market is going up, you just start, but you have to think like a pilot. What are the possible things that may happen if this thing fails? What next? So from this monthly chart, let's go to the weekly chart. Okay, if we come to the monthly chart also, you can see that the market broke a structure here. It broke this structure, made higher high, then made higher low, then broke this structure, made higher high, then returned and made lower low, and made a lower low. So we are going to be expecting market to break this structure to make a higher high. But remember, the overall structure is still bearish. It will continue to be bearish until this area is broken. So we are anticipating price to break this structure here and move up. And you see the fib, you have the 1.30950 is in harmony. There is confluence, and we have the round number, so price will definitely reach this area. So I didn't enter on time, so I'm not going to enter a trade on this. I will have to wait for price to move up. So let's see the weekly chart. This is the weekly chart. Let's see what we can do, what we can achieve with the weekly chart. So you can see the price. You can draw a trend line. I can observe a trend line. You go to line chart, you see you can connect the trend line. Here you have trend line. All these things will guide you in making your prediction. So what we are going to be looking is breaking structure. So market made a move from here, broke this structure. This structure was breaking, and that started the bullish structure. So market moved, closed above this structure, then returned, then now continued, and it's now doing that in a trend line. You see it broke this structure. This structure was broken. This structure. Now market returned to this trend line. It's now forming a trend line. So we are anticipating that market will break this structure. So get ready to look for a nice opportunity to buy. We break this structure and possibly touch this trend line. So this is just the market structure in the weekly time frame. If you go to the daily time frame, you will be seeing a different thing. But the most important thing you need to know is that you have to trade. Your trade should be in harmony with the higher time frame. You need to understand the story the market is telling you from the monthly, weekly, daily, hourly chart. So this is for pounds USD. Let's look at Australian dollar, Japanese yen. So if you look at this chart, you will not appreciate much of what is happening. But when you start, I want to use my template, supply and demand template. Let me start from the higher time frame, monthly time frame. What can we see? We start our analysis from 2016 to date. So in 2016, what happened? There was a movement, upward movement from A to B. Then there was a retrace. Okay, a pattern is forming. We have M pattern forming. There was a break in structure, but it didn't continue. It returned and break another structure to continue down trend. You see this breaking structure. This structure was breaking A, B, C. So D broke this structure, D, C. Now we have A, B, C, D, E. Now E retraced up and broke this D. So it continued breaking, retrace, break. Now the market reversed by breaking this structure. So as soon as the market break this structure, it retraced, continued. It broke this structure to go up. You see how we're able to predict the market by observing the breaking structure. Our market is now making higher highs, higher high, lower low. You see there will be a break in this structure, and that will lead market to make a higher high, and this is telling you that the market is bullish. Just like we said in the earlier part of this video, in bullish market structure, market is gaining value. The market is making higher highs and higher lows. So that is what we are seeing here. So you see during the retracement you can buy, but you can sell, but it's better to wait after the retracement. If the market is bullish, just be looking for buying opportunity. So you see the market will break this structure. It broke it and went up. So we are looking for a retrace now. Market may just retrace. Remember, as you are doing this, your eye should equally be on fundamentals, which may just affect the whole thing. The best way to trade is to combine both the technical and fundamental analysis together. You combine the technical and fundamentals for you to be a successful and profitable trader. So we are looking at this. Market may just come down and continue to go up. So we may look for a possible trend line. So on the other hand, market may come and break this structure. Once market breaks this structure, we now know that there is a change in trend, that the market is now trend going down. So if market breaks that structure, you now have a retrace. Market will now start making higher highs and higher lows. It will start making lower highs and lower lows. So you see it made a lower low, made a lower high. So the next thing now is that it will make a lower low. After that, it will make a lower high. So this is how to use market structure to predict price movement. So you need to learn this, open charts and go through it, mark it. If you don't mark it, it will not be clear. When you mark it, it will now be clear. You will be able to see the direction at which the market is going, and you'll be able to predict a market. So let's look at, I think we have done enough. Okay, let's look at CAD, CHF and see what is happening there. So if you look at 1 minute chart, 5 minutes chart, the market will appear random. But when we go to the higher time frame, monthly time frame, let's begin to analyze with that. As usual, let me use my template supply and demand. I'm a naked trader. I trade without much on my screen, so it's better. It will give you a better overview of what the market is doing when you put in so many indicators in your screen. It will clutter your screen and makes you and will blind your vision, will make you have tunnel vision. Sometimes you will not be able to see what is happening in the market. So let's see what is happening here. Let me use the line chart to get overview. You see what is happening from 2016 to the date. Market, there is a break in structure. There is a break in structure. You see the break in structure. This is more like a Quasimodo. You see, market made, you see, low, high, lower low, higher high. So it's more like a Quasimodo trying to form. So after that, what happened? You have a higher low. So market is in uptrend, but market failed to break this structure. It made a lower high. After that, there was a break in structure here, and market made a lower low. So this means that market is now in downtrend. After that, you now had a lower high. See, market made a lower high. It didn't make a higher high, but lower high. So after that, what will be our anticipation? That there will be break in this structure. And what happened next? There was a break. Market broke this structure. So after that, you expect a pullback. You use the fib to anticipate possible area of pullback. You also add the round number. It will tell you area of confluence will help you, where the round number and the fib numbers, where they meet. It will tell you that there is possible, these are point of interest where reverse market can reverse. So see, this area is our point of interest. This area where the fib and the round number are meeting. So you see what happened there. So market made continued. The line chart is better for us. So market made a higher low, a lower high, I mean, because it didn't break this structure. So after that, it made a lower low, no, a lower high. Then after that, it made a higher high. It broke this structure, but it didn't continue. So after that, what happened? Market broke, went down, break this structure to make lower low. So the market is now in bearish condition. It's bearish, so it continues to fall. So, but you can see that the market is oversold. We're expecting a pullback. So we go to the weekly time frame. What is happening in the weekly time frame? So let's see what is happening. For a reversal to occur, we are expecting that there will be a break in structure. Here there is a break in structure. Market broke this structure and is now retesting this structure. So we are expecting market to, if the downwards, if the market will continue to be in downtrend, that means market will break this structure. The market will come down here. It depends on what the fundamental will offer within the week or next week So if there is a news coming, you don't have to check the news, CAD news, Canadian dollar news, or CHF news. If there is positive news, it's possible that the market will break this structure, and that will be the beginning of upward trend in the CAD CHF. But if there is a negative news, it may just continue to fall. So all these things depend on the market sentiment, the news, and also the technical analysis. So if we have a good news report, you find out that the market will break this point, retrace, and continue upward movement. So as you are trading, be identifying the point of interest, point of confluence. These are areas where you anticipate price to reach. So this is just introduction to market structure. We go to types of market structure. So here you see the uptrend, short trend, downtrend, uptrend market structure, downtrend market structure. This is just overview of how the market structure works. Then the sideways market structure. So I think this is a good introduction to market structure. With this, you are able to have idea of what the market structure looks like, and I encourage you to go back and practice, open your charts and draw the market structure. The assignment I will be giving you is to find 10 pairs and draw the market structure in monthly, weekly, and daily time frames in each of these pairs. You can submit it to the Telegram group. So that is all we have for today. I'm going to be making a video on the correct way to use market structure for effective, profitable trading by next week if I'm free. Thank you. And before you leave, if you have not subscribed, please kindly subscribe, like this video, and also share it with your friends and loved ones so that we work together to our dream destination of achieving financial freedom. Thank you.